Hey, it's Mike. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about my 0 day to expiration option strategy, as well as my main portfolio. We're going to talk about all the different metrics I discuss on that, and then we'll kind of go from there. So on this channel, I've been touting where I have really good foundational holdings, and what I would do is I would borrow against that. That strategy has not changed. However, what I invest in has changed. So usually what I would do, I would have these holdings, and then I would invest in covered call income funds. And in the past, I had about $60,000 borrowed. Nowadays, I don't do that anymore. I actually sell the options myself. And the two reasons that I do that myself is, one is preventing NAV erosion. So when you are in control of your options, you can get a lot less NAV erosion. So one of the biggest downfalls to these like covered call income funds like Tesla and AMZ and Yield Max and Round and all these different things is that there is a component of NAV erosion. So every time you get a premium, the share price of the ETF goes down. And I really didn't like that. When you sell options yourself, that's not necessarily the case. When you sell options yourself, when you get a premium, your overall portfolio doesn't go down by that amount of money, which is why I've been slowly switching over. However, I will be completely honest, I haven't been making as much money as, investing in the AMZ and Tesla in terms of income. However, I feel my portfolio is much safer. I'm in a lot more control, and I'm just still getting tidbits of money that will add up in the long run. So my total account value is $234,731. The majority of this account is held in Tesla. So I have 900 shares of Tesla. And as anyone who follows the stock market, Tesla has been killing it lately. It just seems to be that Tesla is on that path of that violent trajectory up. It's not on the violent trajectory down. So I have 900 shares, and to produce a little bit more extra income, I have been selling covered calls against those shares. However, I had to roll my positions quite substantially because the price that I was selling my covered calls, it blew through it. So right now I'm selling 9 covered calls on Tesla with the December 19th, 2025 expiration at $350. The thing is, the Tesla share price is already at above $350. So in the next couple of months, I will probably have to roll it. Ideally, what I'm going to do is I'm going to roll it when Tesla is down. So hopefully there's some sort of pullback. Then I can buy the calls back. And then when it starts going back up, then I can sell the calls. But this is my portfolio value. As you can see here, last week up 9,000. Last month, we're up 32,000. Last 3 months up 57,000, and your total year to date 24. 1 year we're up 36, and all time we're still technically down $6,000. So we're almost at all time numbers, but I digress. Other metrics that I like to track on this channel is my margin status. So I have a very low risk of being margin called. I have about $220,000 buffer, and we're just going to click on these details here in just a moment. So individual cash, I have $0, but my total margin use is only $69.27. It is a lot less than the $60,000 that I was using. And we'll discuss that more about when I do the option plays. So yeah, moving along. So the interest rate would be 6% if I did have if I did borrow money to invest in equities, I would be paying 6% on that money, and the first $1,000 is free. So since the amount of margin I have is under $1,000, and I'm not going to be paying anything in daily margin interest. A couple other things I like to track on the channel is if we go to this investing profile. So equities here, we have 99.97% equities. Very little margin use, 0.03%. And then you can see here my overall stock positions. My total return looks like it's up $77,000, which is a entire person's yearly salary. That's incredible. Margin use, we talked about these here. Margin maintenance. So because the strategy that I implement now is I'm selling cash secured puts. And when I sell these cash secured puts, I'm using about a 5 delta to just get some premium. The big thing, since I'm using margin, is I have to play it a lot safer than if I was just using my own money. If I was using my own money, if I lose it, I lose it. However, if I'm using margin, I have to be a lot more diligent in deciding what I'm investing to and what is the style, like how aggressive and how conservative it is. And I do believe that the way that I'm doing it gets like the best of both worlds. Like, I'm getting that little extra income, but I'm being super conservative because ultimately my plan is we sell options here using margin. Ultimately, the plan is to make income and is to not lose your money. So however that happens, that is the goal. So numbers looking good. So very low risk of being margin called. All right. Before I get to my spreadsheet, I want to talk about like what my plays will be for this next coming week. So obviously I own Tesla. Since I'm selling cash secured puts, when you are trading options, when you're selling cash secured puts, your number one priority is trading the stock. So if you're trying to imagine if you didn't get any option premium for getting in Tesla or the S&P 500 or anything like that, your number one goal is to get the stock at the right price. When you are investing in real estate, you don't make the money off the rental. You make the money off of buying the house at a really good price, flipping it, and then renting it out, because then you could do a cash out refi, take that money, and then get the rental income. So when you're buying a rental property, you want to buy the right price. When you're buying stocks, you also want to buy the right price. I am the type of person where timing the market is a fool's game. However, I think that the goal should always be at trying to get a really good entry. So when keeping that in mind, when I'm using a 5 delta, you're pretty much getting a really good entry because there's a 95% chance it is not going to go down that low. And the 5% chance it does, you got in at a really good price. And then you can go ahead and sell covered calls because hopefully at that point, then the stock will recover and then you can generate premium selling calls. So for example, like tomorrow is Monday. This is what the game plan would be. So I'd click on this little button here. We are selling a put for the next 5 days, and we're going to scroll down here and I'm going to pick a delta that is about 5, which is about $50. And, some of you will say that is so low. You are just wasting your time. I am not wasting my time because I'm getting $52 a week, or like about $10 a day doing nothing. If someone came up to you in the street and was like, here's $52, you would say yes. And then obviously once this plan scales, once this account is worth millions of dollars, this is just these small numbers will be generating a lot. You'll be getting good entries and then you'll be making good premium off of calls. So I'd probably do something like this, about 50, or maybe this one right here, the 305. So the current share price of Tesla is $353. The likelihood of it dropping down to $305 in the next 5 days is extremely low. So this is what I would do for the Tesla position. Now for the S&P 500, since it's a daily, I sell options daily on the S&P 500. And again, the goal is to make about $10 a day. That's the end goal. And so what we're going to do, we're going to sell put. And what we're looking at here is around $10 is where it's about a 5%. So right here, 14, a little bit above 5. So we would be selling the 587. So the current share price is 596. For the next day, if it dropped almost $12, I would be getting in a really good entry and I would get $10, and then I can sell covered calls. Because then if I would sell a call at the money or slightly above it, you'd make $38 plus the difference between the two. So that's a money making formula right there. So again, the goal is to get really good entries while getting paid to get really good entries. All right, moving along, let's go to the actual spreadsheet here. So I didn't make a video last week. I was caught up with life. I was putting my gym together. So this is for the last 2 weeks. I started getting rid of these. Like I used to have like, what is the strike price? What did it close at? It really doesn't matter. Ultimately, it's like, what's your premium and what is your capital gains and how much are you setting aside for taxes? So like that really doesn't matter. I did not get assigned on any of the positions. So I sold 10 positions. Did not get assigned on any of them. So the first week I made $110. This next couple set of days, $52 for a total of $162. And this is not, counting for taxes or whatnot, but $162 really doing very minimal amount of work, I think is great. The other thing I forgot to mention was when I do these trades here. So like, for example, I'm going to be selling one cash secured put on Tesla, and then I'll be selling one cash secured put on the S&P 500. What happens is if we go to this investing account, it will set that money aside as collateral, because right now I don't have any cash in my account. I'm still marginable, about $69.27. By the end of this week, I will be cash positive. And what will happen is, let's just say the S&P 500 is $60,000. They would set $60,000 in the option collateral plus the $30,000 for Tesla. So my option collateral will be about $90,000, which they're then make the margin maintenance much higher than that. So just keeping that in mind. So like my plan in terms of like what the amount of margin I want to use when selling these options is like, I want to do about 50%. So if my total portfolio value is $234,000, then 50% of that would puts us at about $115,000. So I can go up to $115,000 worth of options collateral when doing the trading, or when setting aside the overall amount of money in margin. So I just want to keep that in mind. And what ends up happening with how Robinhood operates is, if you, for example, like let's use that $60,000 S&P 500 plus the $30,000 Tesla position, that's $90,000. So $90,000 would be set aside as collateral, plus the margin maintenance would go up. The margin maintenance is higher when you have options collateral because you don't own it. When you own the shares, or when you're using margin, what ends up happening is there's a margin maintenance. So the option collateral, the $30,000 is set aside as, or $35,000 is set aside as option collateral, but then your margin maintenance is 30%. So $35,000 times 0.30 is what your margin maintenance would be. But when you're setting aside cash secured put money for options, then the margin maintenance is the full price, if that makes sense, not the margin maintenance. So like, when you're doing cash secured puts, $35,000 would be set aside, and your margin maintenance would go up $35,000. If you're selling calls, then that $35,000 is really 30% of that. So just keeping that in mind when doing that strategy. But like I said earlier, the total amount I want to be using is about 50% of whatever this is. So if this is a $10 million account, then I'll be doing $5 million worth of selling cash secured puts on the S&P 500. All right, so we made $162. Overall plan, I want to make about $5,000 a year, which comes out to about like 4%. So this is money I don't have. I'm making 4% income on money I don't have. I'm getting really good entries. I think this is pretty solid. And then I updated my margin amount. Margin maintenance obviously much less, but one of the things I like to track here, like this is more. These things are more for like my own numbers, but the thing that matters is a premium plus capital gains minus buying it back. So essentially the amount of income I have made doing this since September is about $1,583. Pretty solid amount. Earlier on, I was making a lot more. I was being a lot more aggressive with selling my calls and things like that. But ultimately, my plan is really just to get a little bit of extra cash flow, get that extra 4 or 5%, and just really chip away at the rock instead of trying to hit it with a sledgehammer. And then going over to my main margin portfolio. So I sold a cash secured put the following week for about $440 here. So that's the premium. Again, didn't buy back or have any capital gains because I'm just selling cash secured puts. And then this last week I made $149 selling cash secured puts on Tesla. So my total is $549. So if you add the two together, so let's call it $550 plus 160, it's like $700. So about $700 this week. Not too bad. No complaints here. And then, so that's about it. Don't forget to check out my brother's channel. He is Project Premium Harvest. He has some pretty good content over there, so you should go ahead and check it out. This is his channel. He's building it nice and methodically, so definitely doing a shout out for him. And I hope you guys all have a good one. Take care.